Want to slash thousands off your home loan repayments? Whether you're an investor or homeowner, we know how important it is to find the lender that suits your unique situation and with the best rate. If you've not compared your home or investment loan in the last 12 months, you may be able to cut your repayments today with a different lender. That could mean more money in your bank account and less stress when it comes to paying your loan. Find out why more borrowers are turning to Finny to refinance their home loans. Call us now on 1300 002 023 and find out what you could save, or visit our website finny.com.au to book an appointment.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby, and our bread and butter of stories of podcasts here at the Smart Property Investment Show is obviously stories from investors themselves and what they've done, how they've got on the property ladder, where they hope to take their portfolios in the future. And today I'm lucky enough to be joined by a young investor who only started investing a couple of years ago, but already has a couple of purchases to his name. Nafiz, welcome to the show. Thank you so much for taking the time.
Thanks, Grace. I'm happy to be on the podcast.
So I don't want to make any assumptions here, but in your 20s, young investor?
Yes, just still in my 20s, but very quickly approaching leaving my 20s, sadly.
So that's all right. You've got, looking at this little bit of information I have in front of me, 3 properties under your belt to your name. That's pretty good going to be hitting before you get to 30. Yeah,
look, I'm very happy to be in this position. I think a few years ago I wouldn't have thought I would be, and I still think there's a long way to go, but definitely feel like, I'm in a good place compared to a few years ago.
What do you do for work, if you don't mind me asking?
Yeah, sure. I'm a lawyer. I'm a corporate lawyer, and I specialize in banking and financial services-based law.
There you go. A little bit different to property, but I'm sure the legal background's helped you out a little bit over the years.
Yeah, I think so. I think people tend to assume because you're a lawyer, you understand how to do the conveyancing part of any kind of transaction. And to be honest, we haven't, like lawyers generally, if you work in a different area, you haven't looked at that since probably when you did your graduate diploma in legal practice at the Australian College of Law. So you know the basics, but in terms of like day-to-day conveyancing, don't really know what I'm doing. So I tend to still go to the lawyers and the conveyancers when it comes to actual settlements of deals.
Yeah, law is definitely a very expansive industry to be working within. So probably is good that you get a conveyancer in there when you're doing that kind of thing. But let's stick to the property today. There's plenty that we can be talking about here. And I'd love to know what it was that really got you started. Like what in the first instance made you go, it's time for me to invest in property?
Yeah, sure. I think maybe even taking a step back, I grew up very working class in southwest Sydney. And I guess first generation Australian, parents migrated from Bangladesh, grew up in country New South Wales for a few years as well in Orange. So I think like our family was a lot better off in Bangladesh. And then when we came to Australia, it was pretty much ground zero. So like case in point, my dad's got a PhD, he's a very highly qualified man. My mum went to university, she's degree qualified as well. When they first came to Australia, they're working in, petrol stations, doing all kinds of random odd jobs just to pay the bills and get by and support 3 kids. So that really kind of like struck a chord with me because I thought, hang on, I'm seeing people who are in a much better, comfortable position. Why can't we be like that? And that really kind of led my way to reading personal finance-based books, listening to podcasts, reading blogs, watching YouTube videos. So I just absorbed all that content and tried to become as proactive as possible when it came to personal finances. And I think because property is an area that's a little bit intimidating, especially to younger people, and it seems like you need to make a pretty sizable deposit to actually start investing, it puts a lot of people off. So it did to me, even in my late teens and early 20s. So once I started working, I started working pretty much straight out of high school. So going back a few years now, but I started working and then saving money right from the get-go. And every time, I got a paycheck, I just put a little bit aside and I just let that build over time. And then I started getting into shares, actually. I started investing in ETFs, exchange traded funds, and index funds, because based on the books I read, that seemed to be the smart way to go. Dabbled a little bit in cryptocurrency. And then later on...
In a good way, or like, did it work? Did it pay off for you?
Yeah, luckily it did, actually.
Yeah.
I got in back in 2016, and I only put in a small amount that would have, like, I kind of went in the approach with, like, if I lose this amount, it's okay. It's not going to be the end of the world. Held on to it. It went up like 5 times, and it went down to half the price that I was thinking, oh, geez, I should have sold out then. And I was like, oh, well, just hold on to it, see what happens. Held on to a few more years, and then ended up selling out at a much higher amount. And to date, in terms of percentage terms, it's my best investment. But in terms of actually dollar cash on cash returns, it's not. Property will far exceed that. But yeah, no, I think I got out early, or I got out at a good time compared to some of my friends. And I still like kind of don't fully understand cryptocurrency 100%. And now they've got NFTs as well. So it's still like a gray area for me.
That makes me feel better that you did well, but you still don't fully get it. Because I think there's probably a few people that are in the same boat of not fully getting it. And it is one of those things, isn't it, where you can't really apply the saying safe as houses to that sector of the investment, landscape. And so then, yeah, it was still a couple of years after that before you did take the plunge into property. I am curious, if you don't mind me asking, whether you had any sense of property being used as an investment tool, given that your background is being from Bangladesh. Was there any is that a concept that was something that you were used to? Because I'm just thinking, we talk about the great Australian dream in Australia, and that is being property, but I know that that's not really a universal concept.
Yeah. So for my parents, they aren't the most financially savvy people. And from their perspective, I always heard a lot of, oh, I wish I invested in property. So-and-so told me to, but I never did. So it was kind of a wish kind of scenario. And I did want to be in that position. So growing up, I saw that, family, friends. So in the local Bangladeshi community here in Sydney, the friends of my parents, the ones that did well were the ones that got into property, especially in the Sydney market, back in the mid-2000s to the early 2010s, before even the big boom came across. But it seems like like as we refer to the uncles and aunties of the community, the ones who are in a comfortable position now and can afford to retire or have taken a step back from work are the ones that go into property really early. So that kind of reinforced to me. And I think coming from a migrant background, and I think it's probably mixed in with just the great Australian sentiment, we're very property focused. And I think if you compare the Australian society to, say, US society, US tends to be a little bit more entrepreneurial, a bit more into shares, I'd say, while Australia, generally speaking, I feel like has always been about, land. And being such a large country of so like little people in comparison, everyone tends to congregate around the coastal areas as well. It just seems like property was the way to go. And then I think also just from looking at my parents and their family and friends, was just property is just something that they understand. They can see it's bricks and mortar. You can go visit it. Where it was a bit different for me, where I went borderless. So I went interstate for my investments. My parents initially didn't really understand that, because from their perspective, it's always invest in things that you can see, just drive down the road or drive, 20, 30 minutes away in a neighboring suburbs and you'll be able to see your investment. So from their perspective, it was still pretty risky to look to invest interstate. But yeah, no, property was definitely something that growing up was something that was important and probably seen as like the only way to really make wealth besides just earning a high income in a professional career.
Some really unique perspectives there. Thank you for sharing. We're going to take a quick break there, but we'll be back to actually unpack this portfolio. See you on the other side. Welcome back to this episode of the Smart Property Investment Show. I'm joined by Nafiz, who has 3 properties under his belt, and we haven't really got to talk through them yet. So at this point of the episode, without further ado, can I get you to unpack that first property purchase? What was the lead into that like for you? You mentioned that you had been looking into shares, done a little bit in crypto. Was it sort of a long-term goal, that saving of a deposit, or did it end up happening quite quickly?
I think it was a bit of a long-term goal. So I had saved up enough and invested in shares, and they were gradually growing. So it ended up being enough for a deposit on a place as my first investment. My first investment was a house, or still is a house in Brisbane, so northern Brisbane, suburbs called Deagon. It's near the airport. It's not too far from the CBD. And that was my first investment 3 years ago. So I would have been 26. And I just remember at the time kind of tossing up between selling my shares and putting that towards a deposit on a place, or just holding on the shares, because I was kind of worried about capital gains tax as well. And then also just reading the personal finance books that I have. They've always kind of reinforced, at least maybe because they're American authors, but invest in index funds or ETFs and hold out for the long term. And then, once you're 50 or 60, you'll have amassed a pretty sizable amount of just compounding interest. So you should be in a comfortable position. But for me, I think what really struck out for me for property was that when you invest in property, the base amounts are so much larger. So, for example, if I had 50 grand in shares, I can put a 10% deposit on a place and that asset could be 500 grand. A 5% return on property, that's 25 grand per year, as opposed to, say, a 10% increase in shares on the same amount, which is 5 grand a year. So even though percentage-wise it's better, that cash on cash return is so much higher and just amplifies so much quicker. So for me, that was a key kind of factor into why I went down property rather than shares after a certain point. So yeah, that was kind of the lead into it. I was also a part of a few Facebook groups. I used to be an active member in Property Talk Australia. So they're a Facebook group, bunch of property investors, buyers, agents, mortgage brokers. A lot of people it was just a good forum to ask, a lot of questions, and some expert will come back and respond, or fellow investors come back and respond. So I used that source pretty regularly, read up on a lot of information that came through there, and also kind of opened up a bit of a networking opportunity. So I got to meet a few brokers, buyers, agents, accountants, just through that Facebook group as well. And at the same time, I was also listening to a podcast called, or maybe the podcast is called Property Talk Australia. Sorry, I might have got it the other way around. I forgot what the Facebook group is called now. I don't have social media anymore.
That's all right.
Probably one of the few people in my 20s that doesn't have social media. I get called a dinosaur from time to time by my mates. Yeah, so when it came to the podcast, it was by Empower Wealth, the guys at Empower Wealth. So I used to listen to their podcast whenever I go on a drive, whenever I catch a train into work. So yeah, just doing house chores. It was just a good time to consume content. And I really learned a lot just by listening to the podcast and going on Facebook, ironically, and, getting a lot of good content about property investing. And it seemed like a lot of people were very pro going down the professional route, using buyers, agents, mortgage brokers, accountants, kind of like setting up a team around you rather than just looking at what's local and listening to your mum and dad, or, what your uncle and auntie say at the local, barbecue. So that kind of struck out with me in terms of the initial start into property investing a few years ago for me. So that's like my long-winded response to your question there.
There you go. So Brisbane, that first property, talk us through the specs of it. What did that look like? Because as well, I want to note that borderless investing, while it was a thing then, you weren't the only one that was going down that avenue. It still wasn't as accepted as I think it's become since COVID has hit. So there still would have been a bit of trepidation there, I'm imagining. What did you end up, going with when you got that Brisbane property? What's the house look like?
Yeah, sure. So Arjun, my buyer's agent and investor kid, he'll laugh about it when we speak about it, but it's not your typical kind of house in terms of desirability. It's blue, it's weatherboard, it's 3 bedrooms, 1 bath, 2 car spots, and it's on about, I'd say about 600 or so square meters of land. So something like that here in Sydney would probably cost $1 million plus, just depending on proximity. But in Brisbane, back at that time, you could get something in the 400 or 450K range. So it's a lot more affordable, especially for a younger investor like myself who just didn't have as high an income or as much money saved up, or as much time really just to save up that amount of money as maybe someone in their mid-30s or later at a later stage in life. And so, yeah, that was kind of me. I don't think it would be the typical property that I'd live in, but it ticked all the other boxes in terms of it was close to the beach, relatively close to the airport, relatively close to the CBD of Brisbane. It was in a well-to-do area, especially the neighbouring suburb is considered one of the nicer suburbs in that area as well, and it was near the border of that suburb. So there was a few things going for it, which led to, I guess, that owner-occupier appeal, which really appeals, I think, to investors because you want to get a place that essentially, day-to-day Australians want to live in, because that's what creates that demand. So that was kind of where I went. Initially, actually, every weekend I was going around Sydney looking at 2-bedroom apartments in suburbs like Rockdale, Bexley, like areas that were like probably 20 to 30 minutes away from the CBD, and they were like 1970s apartments. But I just didn't feel like I knew what I was doing compared to maybe hiring a professional team around me. And I guess there's obviously exceptions, but I think for the most part, apartments generally don't tend to do as well as, freestanding houses on big blocks of land. So I just thought, okay, I need a bit of expertise here, and hire in the big guns and maybe get someone in to help me out on this investment journey as I look to buy my first place. And I just remember sitting in my car with a notepad and pen, just writing down my notes for each property I looked at. So I'd look at places from like 8 or 9 a.m. when the opening house started through to like 3 p.m. when they closed on Saturdays. Just drive around Sydney to place, looking at places by myself. And yeah, I just thought, okay, there's got to be a better way of doing this, an easier way as well.
And in walked Arjun.
Yeah, and then Arjun reached out on Property Talk. I can't remember the Facebook group name, but yeah, he actually used to post a lot on that Facebook group chat. Whenever someone asked a question, he'd come back with like a whole bunch of information with statistics and easy to understand kind of manner. And it wasn't just like one essay. It was like, broken up neatly, easy to follow, easy to read. And so I responded to a few of his comments with further questions, and he actually inboxed me on Facebook. And then we set up a coffee, had a chat, and then I guess like it worked out for both of us. We kind of, it was a good match in terms of what I wanted as an investor. So yeah, we kind of signed the paperwork and got started as a client of his at Investor Kit.
So that first Brisbane property, what was the sale price? What did you end up getting that for?
For 18.5.
Okay. And that was 2019. Is that correct?
Yeah, 2019.
Yeah. So what's it worth now, if you don't mind me asking?
I think the market's gone down a bit, but at its peak, it was around 720 or 725. But I reckon if it's dropped by, you read in the AFR on the daily that property prices are dropping. Of course, there's markets within markets, but generally speaking, if we look at Brisbane holistically, if it's gone down by, say, 10%, I'd say at least it'd still be around 650 or more.
Which is still way better off than when you started with it.
Yeah, exactly. Yeah.
How's the rental yield?
Rental yield's not bad. It's probably one of my lower yielding properties. So right now, I think I started at $400 a week for rent. I don't have the numbers on top of me, but I'd say it's probably like low 4%. And then I think now it's at about 410, I believe, or 420. It's my lowest yielding property, but in terms of capital gain, it's my best at the moment, just maybe because of the time that I've had it. And the tenant's good as well. So I don't know. I'm kind of one of those stranger landlords, maybe, or property investors who like kind of feel bad for increasing rent. So like, unless like the market has shot up a lot and I'm, charging my tenant $50 to $100 less than what the rest of the market does. If the tenant's good, they look after the place, and even recently had floods and they were really good in terms of just like trying to reduce damage to the property. I kind of reward that. I'm happy to kind of just stick to the rental yield as is, which is probably not the best investment strategy, but from a human perspective, I'm okay with that. Yeah,
good on you. And so it's a long-term game for you, I'm guessing. Just the way that you're talking, that's the vibe that you're giving off.
Yeah, I think so. Like I've always read and listened to the experts, and they always say, just stay the course. Property is a long-term game. So I don't really see myself selling these. If anything, if I, when I pass on, I'd love to like somehow legally put in some kind of statement or some rule that like, my kids or my grandkids can't sell it either. They can enjoy the capital gains and the rent from it, but I don't want them to sell it because I'd love to be able to create that generational wealth.
So let's talk through then the second and third property. What was that? You obviously got a bit of confidence out of making that first purchase up in Brisbane. What did you then do next after that?
Yeah, sure. So I think the first investment property was probably the most difficult. From then on, it became a bit easier because I was used to the process, and also equity helps in terms of the property just increasing in value versus your loan amount. So the second place I bought was in Adelaide in a suburb called Shado Park, and that was near the beach, pretty close to the CBD as well. Good kind of family kind of area, place you'd like to raise your kids, schools nearby. So that's a 4-bedder. It's on about 750 square metres of land. It's a brick house. It's a lot nicer to look at than my Brisbane place. A bit more traditional in terms of actual house. Relatively new interiors. And I actually went down to Adelaide for the first time recently. I've never been to South Australia. And I use that as a good excuse to kind of just check out the property as well as like see a bit of wine country and the Barossa and the McLaren
As you
Valley.
should. Got to take advantage of it, don't you?
Yeah, definitely. Yeah. And the third place I bought was earlier this year. That was in Kerwin, which is actually a suburb not too far from Townsville, so very close to Townsville. So I kind of like to explain to people, I usually say Adelaide, Townsville and Brisbane, but the suburbs are obviously, lesser known. So that one's also a 4-bedder. It's probably the nicest looking place I have. It's a relatively new interior. My other two places were in the 70s and 80s, in 1970s and 1980s. This place was made about 15 years ago, so obviously it's a bit nicer interior. It's on about 650 or so square metres of land, double garage, 2 baths, so it's a 422. And yeah, so that's my best yielding property. But in terms of capital gains, I'd be very surprised if it's gained any price just because of the market at the moment.
So talk us through that, both Adelaide and Townsville. How much did you purchase them both for?
Yeah, sure. So Adelaide I bought for 492 and Townsville I bought for 445. And in terms of yield, Adelaide at the moment it's 465 a week. And I don't know what that is as a percentage, sorry. And
someone will be doing the numbers as they're listening along. They'll work it all out.
Yeah, I reckon it's probably like high 4s as a percentage. And Kerwin or Townsville, that's 500 a week. And that's probably a bit over 5%, I'd say, yield. So that's my best yielding property at the moment.
Is everything positively geared? Are you kind of neutral at the moment?
Everything is positive, although due to rising interest rates.
That old chestnut.
Yeah, so the third place is approaching very close to neutral. I think if anything, if you take into account like just the side costs with maintaining property, it probably is like slightly negative geared, if anything, or neutral at best. But if you just look at on face value, rent versus loan repayments, it's slightly positively geared.
Still plenty more to unpack. We're going to take another break there. See you on the other side. Welcome back to this episode of the Smart Property Investment Show. I'm joined by Nafiz, who has 3 properties under his belt, and we've just unpacked all 3 of them. It's now time to get to sort of what that portfolio actually looks like. Nafiz, talk us through how much is the portfolio as a total worth now, and how much, because really we can probably do the numbers as well. My maths is not mathing right now, but total purchase price of your portfolio and how much it's increased since then.
Yeah, sure. I think approximately total purchase price would have been about 1.3 to 1.35. And current market price, I would say, is roughly a bit over 1.7. I think at its peak before the 10% drop, it would have been around 1.75. But yeah, there's probably been about a 400 or so K increase, maybe slightly more.
Which is pretty good going.
Pretty good going in 3 years, yeah, and I'm definitely very happy with that. And I was just thinking to myself the other day, if I bought shares, and it kind of stuck with it, there's no way I would have increased in value by that amount over such a short period of time. Yeah,
definitely. So what is next for you? 3 properties under your belt. Where are you? Are you thinking of extracting any of the equity from that to take on a 4th purchase?
Probably down the line, not at the moment, just because I bought one last year and one this year. So I might wait a couple of years. And also just in the current interest rate environment, I'd like to just make sure that I'm cash flow wise okay. I think if I take a 4th one on, it might be difficult from a serviceability perspective as well, unless I get a massive pay increase or, property interest rates just drop all of a sudden, which I don't think they won't drop probably until, 2024, if anything, or like 2023, based on what I'm reading at the moment. So yeah, that's kind of like my horizon. And then also I'm thinking potentially down the line, I wouldn't mind buying a place with my partner. So maybe that could be a place for like us to live in. So it might not be an investment. So I'm kind of in 2 minds where I might buy another investment, say in 2 years' time, or I might just look to buy a place to live in with my partner in a couple of years' time. And then together using the 2 incomes, we can start to build up a portfolio together as well.
That's the beauty of a property portfolio, isn't it? That you've got that flexibility and that choice to keep changing your mind or keep your options as open as you can for as long as you need to as well. So it sounds like everything has worked out pretty well for you to date. And it's obviously a journey that you're going to continue on for a while yet.
Yeah, I think so. Yeah, it's worked out well. I'm very happy with it. And I think a lot of people are hesitant to, go borderless or use buyer's agencies or, just pay an extra amount. But I think it's paid for itself so much. And I have so much peace of mind knowing that I've got 3 houses on big plots of land and that tick all the owner occupier appeals. So I'm not too worried long term, So I think from that perspective, it's something that I'll probably continue to do. Knock on wood, if everything, is okay for the long term, I'll probably continue to go down this journey for the decades to come, and then hopefully be in a position one day later on in life where I can choose to work and it's not a necessity, and I can maybe explore other things or take a step back from work and kind of just enjoy other aspects of life, which I think a lot of property investors go in with the ultimate goal of having.
Yeah, good on you. So is there a particular number that you've got, in your head, or is it still just kind of, just wait and see what happens? Because some people do have that real, I want to have 10 properties by this age. I want to be at this point.
Yeah, no, not really. I don't have a particular number at the moment. I think I'll just kind of play it by ear as I go along. I'm pretty numbers orientated. I've got all the spreadsheets and stuff. So I'll probably just play around, tinker with it from time to time and just see where I'm feeling comfortable. I did have a little goal for myself, having 3 by 30. So I'm happy that I've accomplished that. And then maybe I'll look to build out a few more over the next 5 years or so and kind of reassess where I'm at. And yeah, I don't have the 10 goal or, the 5 goal or anything like that. It's more so just a level of comfortability with my finances.
I love that. Good key takeaway for people as well. Level of comfortability. That's so important. That can't be underestimated as a strategy in itself. Nafiz, thank you so much for your time. I'm already looking forward to hopefully getting you back on the show at some point when you do have an update for us, whenever that might be. So good luck with it all and just enjoy the ride.
Yeah, thanks, Grace. Thanks for having me on the podcast. And I'll be keen to continue tuning in whenever the new episodes come through, and I'm happy to come back on later on down the path.
To everyone who is listening along, we hope you have enjoyed this conversation as much as I have. Don't hesitate to reach out, editor@smartpropertyinvestment.com.au if you have any questions. As always, make sure you stay up to date with us on our social media, Facebook, Twitter, and LinkedIn, as well as on our website, smartpropertyinvestment.com.au. Subscribe for all the latest news if you haven't already. That's all we've got time for today, but stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Have you signed up to HR Leader? Go to hrleader.com.au to subscribe. Receive the latest HR and people leadership insights and news.